beginning of 2022 was a highly volatile time in the markets. On the fixed income side, the pivot by central banks to a more restrictive monetary policy pushed interest rates higher, resulting in Canadian bonds having their worst quarterly performance on a historical basis. These returns are a manifestation of the greater risk in typical bond portfolios due to the fact that their duration increased over the last few decades, which therefore translates into greater exposure to interest rate risk. On the equity market side, prospect of rising rates and the war in Ukraine contributed to difficult performance early in the year. US equities, developed countries outside of North America, and emerging markets experienced negative returns. In fact, only Canada, driven by commodity prices and more attractive valuations, had a positive return. Benefits of good diversification are even more apparent when markets are more volatile. As can be seen this year, the low correlation on average between bonds and stocks is not a property that is constant over time. NALT expands the diversification opportunities of a portfolio by investing in liquid alternative assets. NALT aims to be decorrelated from equities while providing controlled volatility and attractive returns. To achieve its objectives, NALT takes long and short positions in 22 highly liquid future contracts. These futures contracts are spread across fixed income, currencies, agriculture, energy, and metals. The allocation process between these contracts is done on a weekly basis and is based on observed short-term trends. Like analysts working for a portfolio manager create quantitative models with their own mathematical definition of short-term trends, each propose an optimal portfolio to meet the objectives. Then, quantitative aggregation model acts as a portfolio manager by allocating capital to the three proposed portfolios in a way that maximizes the chances of achieving the objectives under risk and diversification constraints. Since the beginning of the year, NALT has taken advantage of sharp rise in interest rates by going short across the yield curve. Commodity price increases in the energy and agriculture sectors have also been captured by NALT. Indeed, long positions were observed in these asset classes. Since NALT's quantitative models attempt to capture short-term trends and positioning is reviewed on a weekly basis, NALT may also be able to realize gains should these trends reverse in the coming months. Thank you for watching.